Good morning and welcome to the first Killik & Co market update for 2018. It's been a very strong start to the year so far. So first of all, for the FTSE 100, the index hit a record high on the last closing day of 2017, and for this week so far it has gone even higher. So at the time of filming this video, the index was actually over 7,700, so that's a very high level indeed. And there's a similar story over in the US. US indices closed at very high levels on the last trading day of 2017, and again this week they have gone even higher. And this week we have seen the S&P 500 go above 2,700 for the first time, and also we've seen the Dow Jones go above 25,000 for the first time. So it does feel as though sentiment is very good at the moment for the market, and it will be interesting to see how the markets progress as the quarter continues. And this week we've also seen the introduction of MiFID II, which is a huge piece of legislation that's coming in from Europe. And it does necessitate some fairly major changes for markets and for market participants. So there was a bit of concern this week that perhaps market volumes would be slightly subdued as market participants got used to new methods and systems. But so far the volumes for equities being traded on the market this week have been fairly close to normal levels, although we have seen some declines in the volumes for bonds and for derivatives. So we will have to see what happens there, but it is likely that volumes will soon pick up to their normal levels. The legislation for MiFID, I am told, does run over 1 million paragraphs, so I'm not going to bore you with all the details, but I will just touch on three major points which are quite key for Killik & Co and for the wealth management industry in general. So the first one of these is that we have to have a greatest transparency of fees. And an example of this is if we are to buy a fund or an investment trust for you, we will have to send you a disclosure of all of the costs of that fund before we buy it for you. So that's one example of the ways in which we have to show greater transparency of costs. The second point is that we have to carry out more transaction reporting. So for example, now if we do book a trade for you, we have to write to you afterwards and let you know why we've booked that particular trade. And I think there was perhaps some concern that this need for more transaction reporting could slow down activity on the market, but to date we haven't really seen much evidence of that. And the last part I'll mention is that research must now be paid for directly. So previously, if a financial institution were to deal through another financial institution, that particular institution would get access to the other institution's research for free. So research was really seen as a free commodity to some extent. However, we've now been told by MiFID that we must pay directly for any research that we use. So that means that wealth managers and fund managers are now incurring a lot of extra cost, and they are also getting access to perhaps less research than they had previously. So there is a concern that this will have a long-term effect on the industry, and we will have to see what happens there. And also this week we've been told that Spotify, the music streaming company, has filed for an IPO on the New York Stock Exchange. So that's caused me to have a look at music streaming this week. And actually 2017 as a whole was very good for UK music consumption in general. So music consumption for 2017 was up about 9.5% versus 2016. And by music consumption we are encompassing streaming, music downloads and also CD purchases. But actually 2017 was the first year in which streaming accounted for more than half of overall music consumption. So last year it actually accounted for 50.4%. So that's a number that has risen very steeply over the last few years. But something else that was quite interesting is that music downloads, i.e. people actually paying to own a downloaded album or single, that number actually fell by 23% versus 2016. So I think that really does show that the world has gone through quite a big culture shift in that people are really less willing or less wanting to own something. So instead of downloading music, we're now streaming it. Instead of buying DVDs, we're now watching them on Netflix. And even instead of owning cars, we're now more likely to lease them. So I think it will be quite interesting to see how that continues over time. Moving on to the week ahead, we do have a few companies reporting. We've got Continental, Taylor Wimpey and Tesco. And then over in the US, we've got two major banks, JP Morgan and Wells Fargo. And it will be interesting to see what they say about the recent reduction to US corporate tax. That's it from us. Have a great weekend and we'll see you next week.